take it across to Sanjiv Bhasin and find out what is it that he's watching for this week. Sanjiv, hi, good morning. Good to have you on the show as always. Sanjiv, let's first discuss what really happened on Friday and post the finance minister's tweet. Having said that, I don't know whether that was the only reason that the markets fell the way they did. But the FI is selling as well in a largest quantum of 2,400 crore rupees. Do you think that's going to get undone and we're going to come back in the green today?
Yeah, good morning, Aisha. Well, volatility is to be expected at new highs. And I've been making the case that there is a little bit of froth on the markets. And if we do lighten up before the election, which is a very big event, it will be only more, positive for the market. Friday's event is always on rumor mongering and so on and so forth, interpretation, which the FM has denied. But I still think that there can be a little bit of consolidation here. We are not going to get past those new highs so easily. It is more about stock specific movement, which I foresee. A large part of the earnings, the positives are built in. However, the underpinning remains that the US is seeing numbers which are now proactive. Now there is a build-up of two rate cut at least, which was consensus one. So data keeps changing very fast. You have to be a little more nimble in trying to book your profits. I still think the longer term picture is there, but in the short run, I would expect some more consolidation, a little bit more weakness on the indices, maybe in the coming week.
What about Kotak, Sanjeev? Looking at the earnings, looking at how much damage has already happened on the stock price, and the management also sort of raising concerns that it's more reputational impact of the RBI ban, than the financial impact that they need to correct now. Do you think all that is going to now correct looking at the numbers then?
Well, take it with a pinch of salt. When we know such a big event happened on the RBI front, it was mitigated by the impact cost, which they said. But numbers are actually way ahead of what the street was making, which was the case which I was making, that private banks were actually suffering just because PSUs were outperforming and under-owned. I thought ICICI Bank, Axis, HDFC, all numbers were more and more reasonable. Now the valuation comfort comes because of the correction, and it could be a cause. But how fast the remedial measures take place? Just for example, Bajaj Finance got its act together in 6 months, got a review and got it done with. I think Kotak will also be very fast off the block. I've always maintained the cost that Kotak is one of the more expensive private banks for a reason. One was the ownership of Uday Kotak. Second was the excellent credit quality. And third is the NIMS. Now the NIMS at a time when liability franchise is weakening has come very, very strong. So I continue to think it is a buy on dips or an accumulate here. Like Nikunj pointed out, you will not get any runaway rally from here because there is over ownership and people would like to shift into faster moving stocks. But I still think as a brand, the faster they can get through this, corrective phase, this again will be back and forth running towards its way. So we have an accumulate on Kotak Bank, and we think this is a very good time. Most of the negatives are priced in. The positives will outweigh, but you need time to be given over here.
Sanjeev, would like to get in your thoughts then on the quarterly performance from an Avenue Supermarts. It's overall been in line?
Yes, Avan. I think Avenue has done extremely well in the present circumstances. And like I've maintained, I think consumption stocks and the retail outlets should do well. Now, we had a contrarian buy along that 3,600 on Supermart, where we thought the valuation comfort was very much in. We still think you should book profit in capex stocks and get into some of the consumer names, names like Britannia, Nestle, Colgate, Marico. That whole basket is looking good, and Avenue Supermart also on decline should be a good play.
Interesting. Sanjeev, what about PFC REC? They were your top ideas all through last week, and now news flow impacting them as well, like Samit was just highlighting.
Aisha, they are 5 baggers in the last 2 years. Even if they see a correction of 10%, it's to be bought in. These are superlative plays. They were very, very undervalued when there was a 13% yield. I've been tracking them for last 5 years, and as a disclosure, we own them. But you cannot make the case of re-entering stocks when they are in such a big bull run. It becomes very difficult to book profit only to see that whenever the results come, they are up 10%. And results speak for themselves. Asset quality is improved. Power is in the best place ever. And we think that maybe you could take some chips off. But my top pick here again is a small mid cap or a small cap power company, because I think power is the sweetest play we've seen in the last 3 years and may continue for the next 3 years.
Interesting. So, Sanjeev, we are starting off a brand new week. You've already cautioned of volatility, taking some chips off the table, but any buyer ideas?
Well, Ratan Power, I told you that at 9 rupees, 4,700 crore market cap, 2,700 megawatts in Amravati, Nasik. It is coming out of the NCLT. I gave you this same as JP Power at 8 rupees when it was an EBITDA positive and only negative sentiment. JP Power is today a 13,500 crore market cap. How can Ratan Power be at 4,700? So I think this is a very, very sweet recovery which is in the offing. If you go by their plant utilization, and once this NCLT is solved, this stock can be re-rated. Now, obviously, this is a slightly high risk play, so do your diligence, but we have a disclosure in that. We have a position. We think this stock is a doubler from here, that is Ratan Power. Second place, Coal India. I think the results were very, very strong. And that is what I've been highlighting, that the merchant power business is giving superior yields. Now, Coal India, according to me, is a no-brainer. And I think still that there is a steep to 530, 550 on this. Keep a stop loss of 456. Third play, I think, is on Friday. There was over excessiveness on the Coforge results. The management sounded extremely bullish, particularly on the Signity Technologies takeover. It's a large takeover of something like $250 million, but the synergies are so strong that they're getting into AI business in North America and so on. I think today at this price of 4,500, you have hardly anything to lose, and you could at least sit on a 25% upside by the end of the year. The synergies have worked excellent. And this is one company, Coforge, which is actually at the lowest attrition. Secondly, they are now more pro-balanced on the AI side, where they are increasing their footage by organic and inorganic growth. So from my side, this is a blind play on the IT side. And lastly is Bajaj Finserv. I think in the whole basket of insurance stroke cross-selling, Bajaj Finserv has been one of the better performers. We have a buy rating on this closer to the 1710, 1720, 1620, 1630. We think this can be an outlier over here, given that Bajaj Finance has now gone through all the correction. This is a holding company. This should do extremely well. I have a target of 1850 to 1900 in the next 2 months.
Sanjeev, it's a critical week when it comes to earnings as well. You've got a whole host of Nifty 50 companies coming out with their numbers. Dr. Reddy's, L&T, Cipla, Tata Motors, SBI. What is it that you would be watching out for closely?
So, Avance State Bank, I think, will be very, very strong, given that they may be able to, in the coming quarter, book the profit of Yes Bank, which will be a bumper profit. Hero Moto is something which I would like to see the language, given that two-wheelers have been the best play in the crowd, but I think valuations are getting far stretched. And L&T is something I should be watchful, because I think the best of capex stocks, valuations are now running very, very uncomfortable. So I would keep a close eye on the large caps, Tata Motor included. I think a large part of the auto and capex, the price is, the best performance is in the price. Take some chips off, go in the power sector, like we said, go in some of the financial services, look at IT, and biggest underweight, which is consumption, should now be a very, very sweet spot, given that volumes are going to pick up, even though margins may remain flat.
Okay, thanks very much, Sanjeev, for joining in and sharing with us your outlook as well as view on earnings.
If you like this video, then like, share and subscribe to ET Now.